Are you eager to gain insights from the master of investing himself? The Intelligent Investor by Benjamin Graham isn't just any book on investing. It's the book that inspired Warren Buffett, one of the most successful investors of all time. Buffett has read and reread this book more than any other investment guide, even calling it the best book on investing ever written. Today, we're diving deep into this investment classic. Stick around to discover the invaluable lessons from each chapter and learn how to make smarter financial decisions. Chapter 1. Investment versus Speculation. Graham kicks off with the crucial distinction between investment and speculation. Investing involves a thorough analysis, promising safety of principal and an adequate return. Speculation, on the other hand, is essentially betting on price movements without thorough research. The takeaway here is clear. Be an investor, not a speculator. Make informed decisions based on solid analysis rather than chasing quick profits. Chapter 2. The Investor and Inflation. Inflation erodes purchasing power, and Graham emphasizes the importance of understanding its impact on investments. He advises diversifying into bonds and stocks and considering investments in real assets like real estate to hedge against inflation. The key takeaway? Diversify your portfolio to protect against the unpredictability of inflation. Chapter 3. A Century of Stock Market History. In this chapter, Graham provides a historical overview of the stock market, highlighting its long-term growth despite periodic setbacks. He stresses that understanding market history can help investors maintain perspective during market fluctuations. The lesson here is to maintain a long-term view and not be swayed by short-term market volatility. Chapter 4. General Portfolio Policy. Graham introduces the concept of the defensive investor, who prioritizes safety and freedom from effort, and the enterprising investor, who is willing to put in the extra work for potentially higher returns. For defensive investors, he recommends a balanced portfolio of bonds and high-quality stocks. Enterprising investors should seek undervalued stocks. The takeaway is to choose an investment strategy that aligns with your risk tolerance and commitment level. Chapter 5. The Defensive Investor and Common Stocks. Graham advises defensive investors to focus on large, conservatively financed, and well-established companies. He emphasizes the importance of diversification and caution against overpaying for stocks. The key lesson is to invest in strong, stable companies and avoid the temptation to chase hot stocks. Chapter 6. Portfolio Policy for the Enterprising Investor. For the enterprising investor, Graham suggests a more active approach, including investing in undervalued stocks, special situations, and bargain issues. He emphasizes the importance of thorough research and disciplined buying and selling. The key takeaway is that with greater effort and analysis, enterprising investors can achieve superior returns. Chapter 7. The Enterprising Investor and Market Fluctuations. Graham discusses how enterprising investors can take advantage of market fluctuations by buying undervalued stocks during market downturns and selling overvalued stocks during upswings. The lesson here is to be contrarian. Buy when others are fearful and sell when others are greedy. Chapter 8. The Investor and Market Fluctuations. This chapter reiterates the importance of understanding market fluctuations and maintaining a long-term perspective. Graham introduces the concept of Mr. Market, an allegory for the stock market's mood swings. The key takeaway is to remain rational and not let market emotions dictate your investment decisions. Chapter 9. Investing in Investment Funds. Graham evaluates mutual funds and investment trusts, advising investors to be cautious of high fees and poor management. He recommends choosing funds with low fees and a proven track record. The lesson here is to scrutinize investment funds carefully and prioritize those with investor-friendly policies. Chapter 10. The Investor and His Advisors. Graham offers advice on selecting financial advisors, stressing the importance of their integrity, competence, and alignment with your investment philosophy. The key takeaway is to choose advisors who prioritize your interests and provide sound, unbiased advice. If you're finding value in this video, make sure to hit the like button and subscribe to our channel for more insightful summaries and investment tips. Your support helps us create more content like this. Chapter 11. Security Analysis for the Lay Investor. In this chapter, Graham simplifies the process of analyzing individual stocks, focusing on fundamental analysis such as earnings, dividends, and financial strength. He advocates for a methodical approach to stock selection. The lesson is to rely on solid financial metrics rather than speculative indicators when choosing stocks. Chapter 12. Things to consider about per-share earnings. Graham warns against relying solely on per-share earnings, which can be manipulated. He advises examining a company's overall financial health and long-term earning power. The takeaway is to look beyond the surface numbers and understand the true financial condition of a company. Chapter 13. A comparison of 4 listed companies. Graham provides a detailed analysis of 4 companies to illustrate his investment principles. He compares their financial statements, growth prospects, and market valuation. The key lesson is the importance of thorough research and comparison when evaluating potential investments. Chapter 14. Stock selection for the defensive investor. Graham outlines criteria for selecting stocks suitable for defensive investors, emphasizing stability, strong financials, and reasonable valuation. He stresses the importance of a diversified portfolio. The takeaway is to create a robust selection criteria to identify safe and stable investments. Chapter 15. Stock selection for the enterprising investor. For enterprising investors, Graham suggests looking for undervalued stocks with strong growth potential. He highlights the importance of patience and discipline in identifying and investing in these opportunities. The lesson is to adopt a proactive and disciplined approach to uncovering hidden gems in the market. Chapter 16. Convertible issues and warrants. Graham explores convertible bonds and warrants, explaining their potential benefits and risks. He advises cautious and well-informed use of these instruments. The key takeaway is to understand the complexities and potential of convertible securities before incorporating them into your portfolio. Chapter 17. 4 extremely instructive case histories. Graham presents 4 case studies to demonstrate the application of his investment principles in real-world scenarios. These examples underscore the importance of analysis, patience, and discipline in achieving investment success. The lesson here is to learn from real-life examples to refine your investment strategy. Chapter 18. A comparison of 8 pairs of companies. This chapter compares 8 pairs of companies to highlight the differences between strong and weak investments. Graham emphasizes the importance of financial health, growth potential, and valuation in making investment decisions. The key takeaway is to conduct thorough comparative analysis to identify superior investment opportunities. Chapter 19. Shareholders and Managements. Graham discusses the relationship between shareholders and management, stressing the importance of good corporate governance. He advises investors to favor companies with shareholder-friendly management practices. The lesson here is to consider management quality and corporate governance in your investment decisions. Chapter 20. Margin of safety as the central concept of investment. The final chapter introduces the concept of the margin of safety, which involves investing in securities priced well below their intrinsic value to minimize risk. Graham argues that this principle is the cornerstone of successful investing. The key takeaway is to always seek a margin of safety in your investments to protect against potential losses. And there you have it, a comprehensive overview of The Intelligent Investor by Benjamin Graham. This book offers timeless wisdom on how to navigate the complex world of investing, whether you're a defensive investor seeking stability or an enterprising investor looking for higher returns. Remember to choose an investment strategy that aligns with your risk tolerance and commitment level, and always conduct thorough research before making any investment decisions. With that said, thanks for watching, and until next time, don't forget to subscribe, like, and share.